If we look at the US VC climate, I mean, we've talked about this multiple times on the show. Just when you print $10 trillion, things accelerate pretty quickly. Valuations go up, deal sizes go up, everything goes up. And we've seen that in spades. I mean, look at these numbers. 2021, you had about $330 billion in VC investment in aggregate, compared to $166 billion in 2020. So almost double the total dollars going into the VC, into tech startup investing. You had maybe a 40% increase in actual number of deals from 12,000 in 2020 to about 17,000 in 2021. You had almost double the amount of dollars and only roughly, call it, a 40% increase in number of deals done. Both huge growth, but you can see much larger growth in just dollars having to go into deals, right? So you see that also in this mega deal chart. So there was, about 330 mega deals, which is a deal with over $100 million going into the deal. 330 of those in 2020 for about $76 billion worth of total dollars. And that drastically accelerated, right? You see, this is where really a lot more money was able to be put to work. Went from 76 billion in 2020 to 190 billion in 2021. From 330 deals in 2020 to 819. Massive increases in both number of mega deals and amount of dollars going into those mega deals. But you also saw inflation, what we call asset inflation. Although there's real inflation, then there's asset inflation. We saw asset inflation climb for valuations. You can see here, the median almost doubled in late stage. It went up by roughly 50% in the early stage. Went up by maybe a third in seed stage, and went up by kind of 25% in angel. And this one I've always tracked this seed and first financing stat. First financings, right? I mean, that's literally what it means. Hey, I just started a tech startup and now I'm raising money for what? The first time. This is a really important stat to track, just if you want to look at kind of the overall health of the startup ecosystem. Hey, net, are there more startups getting their first round of funding every year or less? For actually a number of years, this stat was actually declining or plateauing. Now you can see the past couple of years, it's really taken a big uptick, going from about 3,500 in 2020 to about 3,750 in 2021. Also, same thing, much more overall dollars going into those deals at both the seed and angel level. So very positive signs to get that engine going with kind of early stage tech startups, which had kind of plateaued for many years, like mid 20 teens. And now going into this new decade, these past couple of years is really on an upward trajectory, which is really good for the startup community. Overall, angel and seed VC deal activity. So put angel and seed together, which are very similar. You had about 5,300 of those deals in 2020 compared to 6,600 of them in 2021, and also a similarly, outsized increase in total number of dollars going into these very early stage investments. So that's really good news. I mean, it's to be expected when you just print trillions and trillions of dollars. Investors need to put that stuff somewhere. Tech has kind of been somewhat foolproof relative to other asset classes, certainly over the past couple decades. So you're really seeing, if not a doubling, really a tripling down. You can just see investors saying, hey, look, obviously just saying the overall risk profile of these later stage tech companies is not what it used to be. And you can just see as an investment class, as an asset class, as a risk profile, investors being a lot more comfortable putting dollars into these kinds of companies as opposed to other ways to invest. Hi, I'm Alex. Thanks for watching the show. Make sure to hit that subscribe button, but even better, make sure to follow us on Odyssey, follow us on Rumble, and text us 203-646-5159. Text the word Monopoly. You'll be subscribed. You'll get updates about when we're going live, our latest videos, and we'll send you even a little goodie bag. And in the event that we all get banned from big tech, we'll still be connected.